Hey, good morning, everybody. So this is Dave here, and I wanted to go ahead and just record this video as like a end of the year review, as well as how I'm going to manage my portfolio going into 2022. If you're new here, I hope you enjoy this video. If you're returning back from my previous videos, you'll definitely see some various changes in how I'm managing my portfolio, and thank you for watching. Let's go ahead and get started here. As you can see, I have M1 Finance already pulled up, so everything's good to go. Now, in the time frame, I do have 1 year set here, and the numbers here aren't really accurate per se, because if you watched my previous videos, you know that I had two portfolios that I merged. So the actual returns and the gains aren't exactly accurate because on August 10th, that was the day that I merged both portfolios. And you can see the day after it went from like 6,000, almost 7,000 up to 9,000. So it is what it is. But anyways, so in 2021, um, if we just do a little bit of pretend here, you can see here that we actually made a profit of 16.23% or $993.65. Yay. So that's about 1,000 some dollars that I gained that I didn't have to work for. You can also see here that now if you're new here, my main thesis or my main goal of my portfolio is like a dividend portfolio almost. So you can see that over 2021, I've earned right around $310.64 in dividends. Again, this is money coming to me that I actually don't have to work for. So yeah, we're doing pretty decent. As everybody knows, the inflation hit like right around 6%. So by getting a 16.23% return, that means that I'm well above inflation. So that's pretty good. Now as far as some changes go, you can see in the master portfolio here, we're actually getting ready to do a rebalance on Monday. By the way, if you're watching this today, it is Christmas, so I want to wish everybody a happy holidays, Merry Christmas, and all that good jazz. But yeah, you can see a new slice here, which is a crypto fund. Um, Now, M1 Finance, you really can't trade crypto, but they do have an ETF, um, which is BITQ. Yeah, BITQ, which is an ETF from Bitwise. And the main thing with this is that it seeks to provide investment results that correspond generally to the total return performance of the Bitwise Crypto Innovators 30 Index. Blah, blah, blah. It's an ETF that, well, let's just read it here. It measures the performance of companies involved in servicing cryptocurrency markets, including crypto mining firms, mining equipment, suppliers, financial services, or other financial institutions. There are a couple ETFs out there that track crypto and yeah, crypto as well as blockchain technologies, but M1 Finance does not have access to those ETFs. Until they do, I went with this ETF just to get in the market per se. Um, but yeah, I have 5% of my portfolio going into that. And then, of course, we have 65% going into dividends. Um, the dividend fund was at 80%. I lowered it to 65. The growth fund, it was at 20. I increased that to 30%. Only because the growth ETFs and stocks usually, I don't want to have to rebalance, every week. So, but yeah, let's go ahead and look in here. We'll first check out the dividend fund. Um, I'm not sure if I did a prior video, um, but it's fine. Previously, through 2021, you can see I had various slices here corresponding to different sectors in the market, and each of these had individual companies. So I went ahead and removed all of these, and instead I'm going with high dividend ETFs, which are two income based ETFs, as well as like a few REITs, and then also some Dividend Kings. But let's first take a look here into the dividend ETFs. Um, One thing though, before I do, uh, the before I remove the slices and everything, my portfolio was right around a 5% as far as dividends. Now it will actually be like 6%. So I'm actually going to be increasing the amount of dividends. The only other thing is that uh, by having all of the individual sectors, I was getting some form of dividend each week. Now, by removing these sectors and only going with these three, I will only be getting dividends bi weekly. So, if we look into the ETFs here, you can see I have QYLD, which is a pure income based ETF. It's a covered calls ETF. I'm sure you're familiar. If you followed any type of stock market finance channels. Also, we have SPHD. QYLD, it does a payout on the first of every month. SPHD does their payout at the end of the month. So we'll just call that, 1 week. And then the REITs, I actually reduced my holdings down to the top three. And all three of these pay on the 15th of each month. I've got Main, which is Main Street Capital. That's not a REIT per se. It's a finance company that deals with mortgages. So I throw it into the REITs just because it deals with real estate, even though it should be listed as a quote unquote finance. It is what it is, whatever. But these are monthly payouts. So we also have Main Street, or Main. We have Realty Income, as well as Stag. Realty Income deals mainly with uh, individual homeowners, consumers per se. Stag Industrial, they deal with industrial companies. So, yeah. Now the new one that I just put together is the Dividend Kings. slice. Now this one, it's the top 5 of the Dividend Kings, or the companies that are listed as Dividend Kings, weighted, and I weighted these by yield instead of market cap. So we have Altria Group. This is a Sin company, whatever. I listed that as 35%. Legert and Platt, that is a furniture-based company. They also do, or they're also involved in the automotive industry as far as like seats and things like that. That's listed as 20%. Of course, we have 3M Company, that's an industrial. We have that 15%. AbbVie, 15%. Northwest Natural Holding Company, that's also 15%. That's a utility, if I'm not mistaken. So yeah, that is our dividends, dividend slices here. The growth fund, I also did some changes here. If you watch my previous video when we went over the market indexes, we had QQQ, DIA, VXUS, and something else. QQQ, DIA. Anyways, I switched those over to the Vanguard. Yeah, the Vanguard ETFs. Only because they have a cheaper expense ratio. So it still follows the same theme. So the VGT, Vanguard Information Technology, that actually, I don't know why they named it the way they did. But this actually tracks companies that are in the NASDAQ. So not there's only a couple companies that are in the NASDAQ that are not directly related to technology, but most of NASDAQ is. So, whatever. We also have VOO, which is the S&P 500, and VXUS, which is the total international stock market. Yeah, and I also went ahead and previously I had a slice that was nothing but ARK ETFs. So I went ahead and removed most of them except for the ARK Innovation. And then I also added the Vanguard Growth ETF. So this is just a pure growth and innovation slice. As you can see, it's not really doing too well since I made it, but, whatever. Then we have our clean energy ETFs. I went ahead and added Drive into this ETF. This used to be strictly for QClean, Grid, Tan, and Lit. But I went ahead and added Drive into this slice. So since I added it back in when did I add this? Yeah, not too long ago. It was back in like the middle of December. So if otherwise this should be at like 4% increase, whatever. But yeah, the theme on this ETF is companies that are clean energy, EVs, things like that. So, essential ETFs, water, food, materials to build shelter. Yeah, not doing pretty, not doing pretty, not the best, but you know, still making gains. I don't expect these to uh have like a million, I don't expect it to like 100x on these. These but they should beat inflation, so it's all good. And then Reit Market ETF, shelter. Um, you can use these for dividend income. The yield is a little low, but I have these in my growth ETFs because they'll grow significantly. Um, yeah, those are the growth ETFs. The stocks, the individual stock listings or companies, whatever. I went ahead and removed the majority of them. Used to be Fang, Facebook, Apple, which I didn't have because that was in my dividends. Amazon, Netflix, Google, and I had a couple more here. Um, so I dropped most of them and instead just went with a basic tag, which is Tesla, Amazon, and Google. So these right here should see some pretty significant increases going into 2022. But yeah, that's pretty much it. So over the course of the year, again, beat inflation, got a return of 16.23% ish, roughly. Um, but yeah, going forward, we should make a lot more dividends. Um, January 4th, uh, this portfolio was sitting at $2,700, and as of today, it's sitting at 14 grand. My goal for next year, at the end of 2022, will be 25,000. I'm hoping. So we'll we'll hopefully see. Stretch goal will be 30,000. Yeah, that'll be my stretch goal. So I'm almost halfway to being able to purchase a Model 3, Tesla Model 3. Um, Not that I'm going to do that. My overall goal for the portfolio is to get $75,000 a year in just dividends. So until I can add like three more zeros at the end of this, there shouldn't be any touching. One other thing that I just want to do a quick go over is tax loss harvesting. Being that I'm selling a lot of my positions, most of these are long positions, but there are a few short positions in here as well. Short positions, as you know, they're taxed really heavily, almost what, like 50%, close to. And all of, not to brag, but all of my short positions, um, I didn't get any losses in short positions, so they're all going to be taxed. Um, but one of my long positions, USDP, um, that one was actually a significant loss. I lost about 200 some dollars by selling this, but that should actually make up for any taxes that I'll get for doing the rebalance this year. So, technically speaking, I'm not going to be losing any money in the long term. So, is what it is. But yeah, we'll see what this happens next year. Hopefully, Omicron and COVID will be behind us, and we'll really start seeing some market stability. With that being said, again, everybody, happy holidays. Hope you enjoy your Christmas day, and we'll see you on the flip side. Thanks for watching. Bye.